All right, everybody. Welcome back to the Cashflow Chronicles with Kris, always on time, Patel. Glad to be back. It's been a minute. Obviously, I was away traveling, and then last week we just couldn't get the timing right. So we are back and excited to hang out with everybody. I know there's already some questions in the chat about a lot of different things. I know Kris is amped up on a few other positions. He hates big tech. What else? What else is going on, Mr. Patel?
What is this thing with like hates big tech? I don't understand. Where's that coming from? Does that make any sense?
You don't hate big
Like
tech?
I have Microsoft, I have Meta, I've got Amazon, like I've got an index fund, like all in my retirement portfolio that's nothing but Mag 7 at this point. I mean, how much exposure do I need to Mag 7 to show that I'm one of you basically, you know? It's it, I feel like there's this notion that if you're not with us, you're against us kind of thing. And like in markets like this, I kind of want to be more against the trend. I'm a contrarian investor, so it just kind of fits in. But even me, like just the amount of concentration risk is pretty insane right now.
So you hate big tech?
Well, I don't hate big tech. I just hate overvalued shit. That's all. Now it kind of depends on what people would consider overvalued. Like as an example, some people think I'm anti-micron, and I'm like, yeah, I'm not anti-micron, but I don't feel like I want to invest in micron. It's just not for me. Like, you want me to hold something? I need it to make sense to me in my brain long term, or even short term, as long as like I can understand the thesis behind it and get behind it. For micron, they're benefiting from a shortage in memory right now relative to the amount of demand. So it's good for them and good for everyone who's holding it. But there's opportunities to play around with some of the names that aren't directly related to like the actual stock itself, like just holding it. Like I think there's a better opportunity in Micron in running an Iron Condor than it is just buying the stock or even selling puts or buying calls or whatever some of the people on Twitter think that you can get alpha from. So
You're not liking the memory names right now, is what I'm
no,
hearing.
I mean my exposure to memory is primarily through the index funds that I hold. I mean, Micron is $1 trillion company now, so that means if you're buying the SPY or you're buying like me, I have the Fidelity Contra fund. You're pretty much buying into that. You're also buying a ton of Broadcom, a ton of Nvidia, a ton of Google. So, like, what's the issue here?
You heard it here first.
Yeah, I
Heard it
mean,
here
look,
first.
if I was bearish on the whole thing, I'd be like, screw it, I'm gonna sell everything in as B in treasuries. Clearly, if I'm long on US equities, that I'm not down on any of these names, but it doesn't mean that I'm gonna strike like a viper in the names like some people. Some people are very gung-ho about the AI trade and they want to like make quick money very fast. And I'm like, I I'm not a new investor. I don't need to do that anymore. You know what I mean? Like if your portfolio is like $10,000, $20,000 and you're trying to like find these big layups, go right ahead, swing for them. But I'm at a point where capital preservation is probably more important than than trying to take a lot of risks. And I'm sure that you're in the same position right now.
Am I?
You are, you know. I'll
Am I
fucking
trying to
put you
preserve
there.
capital?
I will put you there, even if you're not, because I am not going to see you squander the wealth that you have accumulated. I think as a friend, that's my job to try to put some reason into you.
I'll slow down when I get to 8 figures. How about that?
Where is your greed, man? What is going on, man? At least protect your. Do you buy any puts on Rocket Lab?
Not yet.
But you're going to, right?
Eventually.
Okay, good. That's what I like to hear.
Yeah, eventually. I wonder what our number one performing stock is in the portfolio.
That's probably Rocket Lab or ASTS, one of those two.
No, I'm anticipating, and I had this thought as well, like when Rocket Lab had its previous highs, and I don't want to make this all about Rocket Lab, but when Rocket Lab had its previous highs, everyone was just like, oh, it's going to pull back. I agree with them. Eventually Rocket Lab will hit some sort of number and eventually we'll pull back. And then everyone's going to be like, oh, I told you so. But at the end of the day, I don't see space going away. And I think that Rocket Lab is going to be a much larger owner of space than people anticipate. So if that is going to continue and persist, then, would it be nice to be able to take some profits off the table? Yes. But at the same time, it's just good business. Like the last thing I would want to do is be in a spot where I saw something coming from 20 miles away and I said, you know what, I'm going to take a big bet in this and then call it quits early. I'm not saying I'm not going to trim a little bit. I mean, I think I've decided at some point I'm going to trim around 250,000, maybe $300,000 worth, because that's around what I anticipate a full position size for me to be nowadays. Like if I were to go into something where I think it's going to be like a next decade, for example, if I were to say that's going to be something where I think it's going to hit it out of the park, it hasn't run yet, etc. I think I would want to get to a cost basis around $250,000 to $300,000, so that when it does move, if it does move in size, then it's actually meaningful, right? Me putting $10,000 into a stock isn't going to move. You know what I mean? Like it just doesn't make any sense, right? So I think eventually I will trim some, but to me, it's at a point where I think the companies could be worth $200 billion easily. I'm waiting to find out a little bit more about the future. Anyway, people will sit there and laugh just like they did last time when it went back down to $50-$60, and they'll say Matt's an idiot, he should have sold. And the same thing will happen. It'll go back down to 90 or $100, and everyone's like, Matt's an idiot, he should have sold. But
no, I mean your ability to live through that volatility is admirable, but you are a mature investor now. You are older. You understand that, how these things work. Narratives can shift, narratives can change. And the thing is, you're at a point where you've made life-changing money. And once you've hit life-changing money mode, then it's like, okay, time to get a little bit defensive, because to try to build up again to what you have already achieved it's not impossible, because clearly you did it already, right? So your ability to, figure things out is strong. So I'm not denying that. But the thing is, from a risk management standpoint, we are looking at a company that's not generating real profits yet. There's no real move for this company, at least in the next 3 to 5 years, where they're going to be able to generate any significant value for shareholders, other than just what everyone else is forecasting these guys are worth in the future, right? So
what do you mean by significant?
So I would say right now they're an $80 billion market cap company. Okay, like they're worth more than Raytheon, and they're worth more than with Northrop Grumman, for God's sakes. So, but they're not generating a dollar in net profit yet. They're not generating. They're not even generating operating cash flows yet. So yes, while the promise of this company is very, very high, at the end of the day, it's not necessarily a business that's built on strong fundamentals. And the correction on this could be rather significant. So if you were telling me, Kris, 90% of my portfolio is in Google, I wouldn't tell you need to hedge it. Why? Because it's a business that's actually making money. It's doing real things. Even if the stock goes down 50% of Google, Google can buy back a ton of shares with its operating cash flow. Rocket Lab doesn't have that ability to do that. So my thing right now with Rocket Lab, and it goes to any company, if the company is generating real tangible profits and cash flows, you can take a 50% drawdown. The company can just use those cash flows, buy back shares, and now you got yourself a move higher. But if your company is going and trading on a multiple that's purely based on what everyone else thinks that you're going to be worth 10, 15 years into the future, that's not necessarily like the most, how do I even describe it? Like sound thing to do, right? I mean, and like I said, right now, the biggest benefit that you have is you've got the SpaceX IPO coming. So a lot of people are just bidding up every single space stock, like Planet Labs, Redwire. What are some of the other ones? The other ones that are shitty as hell that are still like getting a crazy bid right now. So while I agree with your sentiment that Rocket Lab probably has something very special behind them, and they've got great technology and they've got a dynamic CEO who's got a vision long term, I would say that this is one of those times where the industry's narrative has gone too far to the upside, and that industry narrative, if it gets pulled back, it's going to come back down. The same thing happened with solar in 2022 when everyone said, "Oh my God, solar's the future." And everyone was bidding up solar. Solar Edge was, I think, like $500. Like Enphase was $330. But the minute that solar narrative ended, what happened? Thing dropped almost 90%. So, like I said, if the company that you were invested in right now was generating tangible returns, I would say hold that shit to the end of time. You are not going to have a problem. But right now, the way I see it, Rocket Lab, it's at least 5 to maybe 7 years away from being justified at the current price that you're buying. Now, here's the thing. You're going to say, well, Chris, I don't need the money. I could just, even if it goes down 70%, who cares? I don't need the money right now. I'm going to be okay with it also, you know? But the thing is, do you really want to have to fight a 70% drawdown and then have to, you know, like incrementally make your way back up to break even again for what you already had?
Do you think that Rocket Lab is more successful at launching rockets than Northrop Grumman is?
Yes, obviously, but not at the scale that's necessary in order to beat back the company like SpaceX. And SpaceX is lowering the cost of launching every single day. The challenge is if your business model is launching things into space, and yes, some of the stuff that they're doing is designing satellites and all this other stuff, which by the way is not high margin. Like there's other companies that design satellites that don't get nearly the amount of margin that people think they are, right? Lockheed Martin designs.
What kind of margin
satellites.
do you think that Rocket Lab is getting on their satellite components?
It's negative right now because they're not generating any profits.
Net margin, yes, but gross margin, what do you think they're getting?
Probably like 30, maybe 40%.
Yeah, that's about right.
Right? Yeah, 30, 40%, which is fine. That's pretty much what you're going to get with hardware. The question is, then comes all the net that you have to put in there. And the other thing is Rocket Lab, while it is like I said, it is a great company. It has technology to get into space. The challenge that you run into is that every day SpaceX is launching bigger and bigger rockets into space. The amount of, what is it called? The dollars to kilograms is going down by the day. So if your dollars to kilograms is going down, the cost of launching is going to get cheaper and cheaper. And Rocket Lab is going to have to compete against them. Not to mention half a dozen other nations doing that whole thing, and half a dozen other private companies that are doing a similar thing. So, like I said, I think they're on the path to becoming a big company over a long period of time. But as of right now, the way I see it, the stock is being carried by the narrative more than it's being carried by its fundamentals.
What price tag do you put on American defense and security?
What do you mean, like per year? Like $1 trillion? That's what the government is spending, $1 trillion right now.
So if I were to told you that the Minotaur rocket, which was used by Northrop Grumman, was intermittent at best and cost $50 million a launch, and now you have a rocket that can be utilized hypersonically to be a test bed for American defense, and it's literally 20% of the price and launches several times per annum and is increasing cadence, what price would you put on that?
Well, that's the thing. It's hard for me to tell. Like, I'm not an expert on that subject, but I can tell if Northrop Grumman, as big as it is, as much cash flows as it generates, is it trading at a lower valuation than Rocket Lab is currently, no matter how much you point towards efficiency, I'm going to go right back into saying, what are the margins like right now? And what are the margins going to be 5 years from now? Even if they're able to disrupt the current incumbent, if the current incumbent is charging X amount of money and cannot make profitability work to like the degree that you need Rocket Lab to work to make it more valuable than Rocket Lab, then what does that tell you?
You're right. I should sell it all, Chris.
You shouldn't sell it all. All I'm saying is
sold it at $10 like you wanted to.
I am not telling you to sell it all. Okay. All I'm telling you is you've made life-changing money. And as a friend, because that is what a friend does, I would say protect yourself. Make sure that you buy some puts so that you can enjoy all the upside on the planet. Hell, if you buy a Porsche, you are going to get like car insurance, right? You're not going to drive the Porsche without insurance, right?
I think I need to get insurance legally.
Right, but at the same time, you're still going to get insurance, regardless whether or not it's legal or not, because it's a goddamn Porsche. So I would say the same thing to you, Rocket Lab, because it is such a winner for you and you're at that level. It's good to just secure it a little bit. If you don't need it, what are you really going to lose? The premium that you paid, which you are a good investor. You know you can sell a way out of the money covered call. Use the call premium to basically pay for a nice protective put, and then you can sleep really good at night.
Generally speaking, what happens when a company becomes profitable?
Say that again, sorry.
Generally, what happens is the stock price when a company becomes profitable?
No, it goes up, but then it also comes down. Like look at Palantir. It became profitable, started generating real returns and growing. It went up to $200. Its profitability hasn't gone down, but the stock has lost $70.
Hold on. And then what happens generally when the company becomes cash flow break even after profitability?
It still keeps going down.
And then what happens once it hits the S&P 500?
It still goes down. There's plenty of companies in the S&P 500.
What happens? Does it go down before it gets into the S&P 500 or after?
It goes down even when it gets put into the S&P 500. Okay, so you're saying your logic is I'm going to hold this because they're going to get included in the S&P 500 and there's going to be upside in that inclusion. That is the same argument that came for Palantir, where a lot of people bought it. It went to 200, got included in the S&P 500, and now it's down 50, not 50%, but like 40% from that. Just because you're going to get included in the index does not mean that the stock cannot go down. And like I said, you are already in a really, really good position. I'm giving you the same advice that I tried to give to Vitaly and Carlos when they were buying into Enphase during 2022 when natural gas prices were high and everyone was buying into the solar narrative. Just buy some damn puts and sleep good at night. I know one of the hard parts for people to buy protective puts is this notion that if you buy a put, it feels like you're betting against yourself. And I think of it as, no, it just means that you're buying insurance. If you don't ever use that protective put, let's say you never have to use it, right? Just poof, magically it doesn't work out. Rocket Lab never goes down. What did you lose? 5%, maybe 10%, because right now they're rather expensive because of the volatility, but you've got to keep everything. And you got to keep every dollar of upside.
So let me ask a question. Do you think that space is going to go to zero?
It doesn't matter if space is going to zero. I don't understand the logic here, brother.
The logic is that of anybody else out there right now, Rocket Lab is the greatest in terms of being poised for owning a large market share of the entire space industry. No, as much as people like to think that SpaceX is the one that is leading the charge in terms of creating satellites, and in terms of, I guess in terms of creating satellites, SpaceX has an advantage, but in terms of being able to provide subcomponents out to the rest of the market, Rocket Lab, I think, is the most highly engineered and poised in terms of a manufacturing standpoint to subcontract for other people. They're subcontracted out for Amazon's Leo constellation. They subcontracted out for the Global Star constellation, which Apple is now using. So they're going to be utilized for the Space Development Agency Tranche 1 and 2 and 3, likely. So to me, they helped put a lunar lander on the moon. So if you honestly think that space is going to slow down, then I can see your logic here. But in terms of the amount of integration in companies that have now been purchased by Rocket Lab that are now instrumental in so many different companies' future success, then if you honestly think space is going to zero, I can see where your head is at. But I only see space continuing to grow.
Matt, you
So
know this.
if they own a very large market share of that, which is likely to be in the trillions of dollars of total market, right? Total addressable market, then I would hate. I'm okay losing, let's just say 50% on my current position in Rocket Lab, knowing that I gave it my all and hoping, because it would have been much larger than what I ever anticipated it to be.
Yeah, but
the thing that I would hate,
you're not giving up.
I allowed you to speak. Let me finish.
Yeah. Okay.
The thing that I would hate is to say, you know what, I'm trimming, let's say 50 or 60 or 70% of it just so I can conserve a couple $1 million. Mm-hmm. And it honestly be what I think, as I've learned more about the company and as I've matured with the company and understand what the potential of it could be, I would much rather lose a couple $1 million than to cut it off early, knowing what I think I know about the company. Mm-hmm. And I can honestly say that. And I've had that conversation with you, back in July last year when we were in Mexico, and I had that, but back then it wasn't even a couple $1 million, but now it would be a couple $1 million. I'm fine with that.
Yeah. The reason why I say that is because it's, like I said, I think this is being interpreted as me saying to you, don't buy a Porsche, don't drive a Porsche because that is risky. What I'm saying, go drive that Porsche, enjoy it, enjoy Rocket Lab. Don't sell a goddamn share of Rocket Lab, but don't go naked without insurance on this. That's all I'm saying, which is like, listen, if Rocket Lab, I hope Rocket Lab becomes a $1 trillion company on its way to $1 trillion. I hope you get there, brother. But at the same time, just understand that this is one of those times where fundamentals eventually break narratives, and narratives comes down, and then people just like, oh my God, what the hell happened? Like I said, I'm not asking you to bet against your position. All I'm saying is you are a mature investor. You understand the cost of holding on to a position for too long if it doesn't work out, and then the amount of time it takes to recover can be rather long. You've made life-changing money on it. If this was like a 5% position for you, Matt, I wouldn't even care. I'd be like, whatever, who cares, right? Hold it. But now it's because you got it right. It's a substantial part of your net worth. And it's a great thing that you actually hit this on the head and you got it. But like I said, as a friend, only a friend would be argumentative and tell you what he actually thinks. Just, I hope you remember that. If I didn't think of you as a friend,
by no means am I, upset, and I appreciate you, and Steve has also been very clear, and Tevis has in the past. So I by no means am, and unfortunately right now I'm underwater in covered calls. So I like the 120, 125, and then I have some at 175, which aren't underwater, but if in a month or two that those are able to kind of be rolled, and because it's only in June, July, it's not like they're out until like October or something like that. If I'm able to roll them out and get above it, then I'll start using some of that premium to buy some puts, like no problem.
And like I said, I'm only saying this to you, like I said, because you're a friend. If you weren't a friend, I wouldn't even broach the topic. I'd be like, whatever, you're a mature, you can do your own thing, But I've seen this story play out quite a few times among friends. And like I said, my job as a friend is to be honest and just tell you what I see. And right now, a lot of times, especially when you are very bullish on a company and you see the future and you've done really well on it, you sometimes need that guy to tap you on the shoulder and say, hey, brother, look, you've done really well. Let's just make sure that you keep staying well. And you're good enough of an investor right now that I think you have the ability to find 10 other companies that are going to do 10 times more than Rocket Lab is going to do in the future as well, just in case Rocket Lab doesn't, turn out to be what you think. But the thing is that capital that's going to give you that ability to take that X amount of dollars and turn that into, fuck it, 8-9 figures.
Possibly.
Yeah.
Possibly. It's one of those things that, I encourage other people to do this as well. I plan on going on a vacation next year, or not next year, next month. And every couple of years, I kind of want to take an opportunity to kind of like be in isolation and really think through the next couple of years. And it's been 3 or 4 years since I've been able to do that for myself. And I think now is an appropriate time because I'm kind of at a crossroads of, what's going on with my own portfolio, what's going on in my life, in terms of, career, etc. So it's going to be interesting to see what I kind of come back with. It'll be a couple days of me just kind of like throwing things against the wall and seeing what sticks. And I know for a fact Rock Lab will pull back at some point in the near future, and I think that that's okay. I think that's also very healthy. I wasn't expecting it to get to north of $140 a share. So anyway, but I think the way, maybe you're right. Maybe they'll end up coming back from the trip next month in early July and be like, you know what? Yeah, it's appropriate for me to trim and focus on what's next, etc.
I wouldn't even trim it. Look, you've got a good thesis behind it. I think the company has a bright future ahead of it. So I'm not going to deny that. Like, I think I'll say that because I was completely wrong about Rocket Lab. I really thought that this was just a launch services business. It was going to burn cash all the way through until eventually it had to just dilute shareholders into oblivion. Clearly I was wrong. I'm proud to it. I'm not too proud to admit that I'm wrong. I was clearly wrong. You called it right. You also called the next economy, which is the space economy, correctly. So I'm not going to give you any fault for that. You're absolutely right to, and you get the bragging rights. But here's the thing. Once you're at that level right now, the bragging rights are only there if you go out on top. It's like if me and you went to the casino together, right? And you won $1 million. And I'm like, hey, Matt, let's go home. And you're like, nah, fuck that. I think I have it in me to get another 10 in. And then you lose $1 million. Like I would feel bad for you. So I got to be that guy that what is it called? That Mac Mittens. Remember the Chappelle show, Mac Mittens? Mew, mew. I got to be your Mac Mittens, man.
I don't know. I don't know what you're talking about, but devil's advocate is the way I like to kind of think of it. But I don't know, man. I mean, where I'm at right now, and even half of where I am right now, I never imagined I would get to, especially by 35. So
congratulations, brother.
I think it's like a W regardless. And so to me, it would be remiss of me to kind of stop early, especially when I think that space is really, and I know for a fact that the top is going to be when SpaceX IPOs. And I think at 5 weeks, I think it's 5 weeks after SpaceX IPOs, the people are going to be able to sell their shares. And I think with that, the rest of the space market and economy will go. But that'll be what it is. But for now, I'm continuing to buy next decade. One of the things that we talked about, what are we talking about tonight is, did I tell you I haven't talked to you. Guess who I got a call from yesterday morning?
Zach?
No, but I did message him. He's out of control. I'll keep that quiet because I don't know how public he wants to be about some of that stuff, but he's doing good. Fidelity called me yesterday.
Oh yeah. I remember. It was because you were trying to transfer your assets out of Fidelity and into Robinhood, and Fidelity is like, no, whoa, wait a second. You see, this is what I'm talking about. Matt has done so well, guys, that the brokers are calling him. Brokers don't call you unless you're moving money inside.
It wasn't even all of it. It wasn't even all of it. And they're like, hold on, you like promise me you're not moving more. And I'm like, well, I'm not promising you anything. Like, what the fuck? Like, I'll move all of it. And they're like, the most we could give you. So anyway, the reason why they called was because I'm moving money. I have the cash to buy. Like, I'm not buying like a brand new 2026 like Porsche or anything like that. And to be honest, who knows? I'm a pussy, so I'll probably never end up buying it. But I am definitely in the market, and I have the cash for it. But the thought I keep having is like, would I buy it cash? Or Robinhood right now has, like, if you were to borrow $150,000, you're going to get 4.5% margin. And so at that point, if you think about it, you could borrow $100,000 and it only costs you $4,000 a year, $4,500 a year. That's cheaper than a car payment, right? So Granted, you're not, that's interest only, so you'd have to pay some of it back over time.
Yeah, but Matt, the other benefit is you can actually write that interest off against your gains, short-term gains.
Yes, and dividends and things like that. So there's that piece. But and I have thought about that as well. It's like, well, if you find something like a GPIX, which yields about 8%, then if you were to buy, let's say, $100,000 car, all you need is 50 grand of GPIX, and it automatically pays on a monthly basis whatever interest you need. But that's a different story for a different day. But like, when you look at it, and I encourage everybody to look at what their margin rates are, and I'm not encouraging everyone to go into margin, right? I'm in a different scenario. I guess, like, it really just depends. And I'm not anticipating on pulling, let's say, 50% of the money or something like that. It would just be, a couple percentage points of the total amount to be able to purchase something. But the reason being was I looked at Fidelity, and they're currently charging me like north of 11.5% for margin.
Yeah.
And so I'm like, well, if I actually want to do this and borrow and be my own bank, say I find an opportunity or want a bridge loan or something like that, then why would I be borrowing at 11.5%? And so the guy basically was just like, oh, we can work with you on your margin rates, blah, blah, blah. And I was like, well, what are you thinking? He's like, oh, probably in the 6s. I'm like, well, that's still 33% more than I'm willing, you know what I mean, than Robinhood is giving me. Even if you give it to me at 6%, you're probably saying something closer to 7%.
Yeah.
He's like, well, we could potentially get it even lower if you do a line of credit. I'm like, well, they're doing 4.5% as margin, not line of credit, right? Like different, we're talking about different things here. So to me, and I'm not saying get rid of Fidelity. I'm not saying for anybody that's listening, get rid of Schwab, because I do think that there is a good reason to have full service brokers, like a Fidelity, etc. And I do think you'll get better fill prices for options and things like that. But if you're thinking about, let's just say you do have a large position, like for me, like the Rocket Lab position that I do have, and you want to have a bridge loan to buy a new home or something like that, and it makes it much simpler. You don't have to go to a bank, or you want to be able to help fund your business or something like that. The 4.5% at Robinhood is just like unbeatable right now. Like it's kind of insane. So that kind of spread of 7% between Fidelity and Robinhood, it's just like, it's kind of a no-brainer. And it's unfortunate that I even had to start moving some money for them to even give me a call. I had never heard from Fidelity before in my life.
I get called from JP Morgan Wealth Management all the time. They're like, so Mr. Patel, like, what can we do to help you? I was like, clearly I'm doing better than what you're doing. So why would, like, I remember when I got a call and they were like, oh, Mr. Patel, maybe we can structure this and do this. And I'm like, maybe you should just open the portfolio and look at the returns. And he's like, oh, okay. And then he was asking me, so what can I do? And I was like, bro, you called me to give me advice. Like, how am I going to give you advice? So whatever. The point is, once you hit a certain level of wealth, money, like people and money, just they start coming your way. Like, have you noticed that as well? Like, people come to you with ideas like, hey man, like we can do this and we can do that. And, and I'm like, bro, when I was actually needing these opportunities, you wouldn't approach me. Now that I'm somewhere along, in the wealth level, it's like all of these opportunities are just, like now they're available to you. I'm like, come on.
Mm-hmm. Yeah. And originally, so people are asking, like, am I doing margin or like a line of credit? And originally I was going to do like a line of credit at Fidelity or something like that, but the rate just isn't as competitive compared to the 4.5% that I would be getting.
I think IBKR. I think IBKR also does 4.5%. The only thing you have to just keep in mind, though, Matt, is that Robinhood right now is doing 4.5%, but they can change it at any time.
Yes.
So like right now they're really in growth mode, and so they really want to keep as much dollars coming in. But now here's the thing: we can arbitrage this. Like, if you can find like, let's say a private equity sleeve or something that's traded on Robinhood that gives you like an 8-9% yield, you could lever up. You could buy that yielder pay Robinhood their 4.5% and keep the difference. And it's literally you're holding that, holding that stock. Like I have a couple of ideas of some of the stuff that I plan on doing with my father-in-law and my dad, where basically there's a couple of funds that have a high amount of ROC. So what you can do is the yield on it is amazing. But the thing is, it's all coming to you as ordinary income. Now, the thing is, if you're retired, the ordinary income threshold to start even paying any taxes, if you're married and you have a standard deduction, is relatively high. And then some states have like this other policy where interest income isn't even considered taxable. So it's like retirees get some of the best benefits. Now, the thing is, some of that money that's coming back to you as ordinary income, it's going to get classified for tax purposes as something called ROC, which is return on capital. So what happens is whatever your price that you bought something, so let's say you buy it at 20 and that year they paid you $1. What happens is that $1 of ROC now gets, cuts your cost basis down to 19. Now, eventually, once it goes to zero, you got to start paying taxes on it. But here's the thing. If you're like retired and you've got ROC that's coming in and you've got 20 years, it doesn't really matter to you. And then what happens is when they pass away, that ROC gets reset because you get a step up in basis. So it's really cool how the tax system works where you can actually utilize it. And then here's another thing. You can do basically, because every year you're allowed to do a certain amount of money in gifts. So you can structure it in a way that, like, if your parents, let's say, have a joint account, you give them a certain amount of money, they can give you $38,000 to me and $38,000 to my wife, no taxes on it as a gift every year. Now you don't have to even declare it. So $38,000 a year, you don't have to declare it. So if you think about it, I could literally take a portion of my cash, put it to my father-in-law, right? I actually have to file that I'm giving him a gift for it. And then, have him do all the investing and everything else with it. And then, like I said, over time, he can pay me back. And when he passes away, I get my principal back at that new ROC. At that new step up in basis. So.
Yeah, there are definitely some creative ways, and I think it's like 19 million or something for the gift total, like lifetime gift or something like that.
Yeah,
yeah. So you can definitely do some creative stuff. I'm not a tax guy, so I would appreciate people looking elsewhere for that sort of stuff. But hey, appreciate the new member joining us. You're the man.
That was the other option that I was talking about. Take some of that Rocket Lab, give it to your mom. Give it as a gift. Mom passes away. That. Rocket Lab comes back to you tax-free, baby.
Yeah, I've thought about that. Yeah, like just having her, I'll pay for the will to get rewritten. And she probably would. She hates taxes more than anybody I know, even more than me. So I might do that. But yeah, I've thought about that piece. But what was I going to say? But yeah, I'm not condoning, people living off margin or anything like that. It's really a case by case basis. But for me, where I'm looking at it from is this, like, my car payment was $700 a month for my Tahoe, right? And so if I'm able to purchase a Porsche or something like that and drive it for less than $500 a month, it's like almost like a no brainer. And I've worked hard, you
deserve it. You deserve it.
Other than my watch, which is fake, I'm trying to think if there's really anything else. Like maybe other than some trips and stuff that I've taken, but like the house I live in isn't very luxurious. I've put all my money and efforts into the markets and it's paid off. And so part of me is just like, you know what? Like even if I end up wrapping it around the pole or something and like wrecking it, it's like I need to have some fun,
Yeah, enjoy, man.
So
someone's like, move to Puerto Rico. Bro, you got to live in Puerto Rico half the year. And you got to actually document and track it. It's not as easy as, oh, yeah, you know what? I live in Puerto Rico now. There's a lot of rules and regulations that come with that. So it's not as simple as just move to Puerto Rico.
But yeah, so you've been focusing on buying some SaaS companies. What else are you focusing on these days in order to kind of purchase? And are you focusing right now on your short-term portfolio, your long-term portfolio? What's going down?
So I'm looking at the AI trade right now, and I think like the market is really running and a lot of capital. Like you don't get a lot of opportunities to buy great companies cheaply very often, right? So especially companies that are generating a shit ton in cash flow, and a lot of the reasons why are very short term in nature. Why you're getting these opportunities. One of the major things is there's just so much capital getting deployed into the AI field. It's almost like oxygen is being drained away from the rest of the market, right? So you can have certain industries that are actually improving the bottom line, top line, but because AI is the major flavor of the day, everyone's kind of ignoring that and they're just really piling into that. So the thing is like I made my money on AI via Nvidia. I made money on it via Google. Like Nvidia and Google were like amazing returns for me, especially Google. Like Zoe's in the chat, so he knows exactly how much Google we were pushing last year. So I made a really good amount of money on Google. But the thing is, I am in a position right now where I want to kind of buck the trend a little bit, look for opportunities where the other people are not necessarily looking right this minute, because I see in a year or two things kind of flipping around. So right now, everyone is focused on growth, growth, growth. And whatever you're focusing on growth, that's all that matters. Everyone only looks at that top line. No one is concerned about the bottom line. But what tends to happen is over time, gradually people go like, okay, wait a second. Like I get it that this company is growing 50%, but how much are they actually generating at the bottom line? And it's always that rotation, that violent rotation that you can sort of make good money on. So my thing is right now, I think the AI trade is still it still has legs. It's gonna do well over the next 5-10 years. I think of the AI as like the internet wave, right? But that doesn't mean that every one of the winners today is going to be a winner in the future. So you could be long the internet, but you don't have to be long specific parts of those companies. Like AOL was one of the biggest beneficiaries. JDS Uniphase was one of the biggest companies during the dot-com bubble, right? I'm not saying AI is a bubble, but everyone knew that the internet was going to be a revolutionary technology. But which companies are the ones that actually stood the test of time and generated the most value for shareholders after the bubble kind of came down? So I think right now everyone is super bullish on OpenAI, Anthropic, which is good. But I also know I wouldn't necessarily want to buy into that specific thing. I'd rather buy, if I wanted to get exposure, buy the Amazon, buy Google, buy Microsoft, because they have these equity stakes in them. And even if those equity stakes go down in value, the underlying business that Google has, Amazon has, Microsoft has, is still going to grow. So will it be a couple of bad quarters? Probably, but you're still going to do fine. You know, I think the semiconductor trade, I know a lot of people want me to, like look at semis, especially in the small and mid cap space, and it's done really, really well for a lot of people. But I'm one of those people at this point. Like I don't need the home runs anymore. I'm okay with just getting base hits. So I wouldn't be comfortable buying anything like that. I mean, maybe as a speculative position, maybe a few hundred shares, 1,000 shares, whatever. But I think there's so many opportunities in the market that are oversold, especially like in SaaS. SaaS to me seems like a no-brainer, especially like ServiceNow. So I would rather take a concentrated position in ServiceNow, which I know has extremely strong cash flows, extremely, strong margins. The narrative that AI is killing SaaS is every day that's going by, it's slowly getting disproven. I work with the software, so I know exactly what I'm getting. So when you have that level of conviction in something, you don't need to chase the other parts of the market. So I'm staying away from the other parts of the market. Even if everyone gains, I'm glad you guys are doing well. Happy for you. But I have my own methodologies on how I want to structure the portfolio and make money. And, maybe I'll underperform you guys. Maybe I won't. We'll see.
So are you buying any more next decade venture global, or are you kind of thinking right now the Iran trade is at the moment kind of on its last leg for now and you're going to wait, or are you just not touching it all? You have enough already?
Yeah, I have enough already. Like this, the one thing I want to start doing is I want to start selling some covered calls on it and then just using the premiums to keep accumulating more shares. So basically just let the stock build itself up. I'm also thinking about basically taking some of my portfolio that's fixed income, and instead of reinvesting that fixed income into more fixed income, to just turn it into like a continuous not rocket lab, sorry, a continuous next decade and a continuous venture global buy. Because like I said, my target for this thing is about 10 years. Now, the one thing that I've been trying to figure out is what the capital return policies are going to look like for venture global in the future. I have a feeling that they're going to go the heavier dividend route rather than the share buyback route, right? So if I'm thinking that they're going to do more dividends, and because they're a corporation and you get like qualified dividends, uh I'm trying to see, like, should I hold it in my retirement more, or should I hold it in like my regular stock portfolio, you know? So I don't know. Like, what do you think? What do you think their capital return strategy is going to be like?
I don't know. I mean, I'm just impressed right now. I mean, if you think about what cash is coming in the door, they're probably going to make around 7.5 to 8 billion in terms of EBITDA this year. So if you think about that from a total cash perspective, it's about $3.50 of EBITDA per share. So when you think about it in terms of what the price to EBITDA is, it's very low. But understandably, when you look at it from a net income perspective, the net income is much lower because they're paying off so much debt and things like that. So it's very interesting when you kind of look at it. How do you want to value it? You know, do you want to value it on a price to earnings? Do you want to value it on an EBITDA? You know, all that sort of thing. To answer your question, though, I don't know. I'm trying to think, because I feel like they're going to stay around the 40 billion debt mark, and once they kind of get to that, I think they're going to be churning out enough. Once CP2 comes online, they're going to be able to churn out enough where these expansion projects and CP3, etc., aren't going to be enough spend to keep up with how much EBITDA they're generating. And so the pay down is going to be pretty absurd in terms of that. And I don't know what they're going to do with it. I mean, right now, I think their big focus is getting the credit rating to as good as possible. So I don't think they're really focusing on the dividend. So right now, I think they'll do small raises just to be able to increase the years, of which they started obviously paying a dividend as soon as they listed. So they already have 1 year in the books of dividend raises. So I wouldn't expect another one until 2027. But I think right now they're trying to figure out what's the right balance to make sure that they maintain not a junk credit rating, but they're able to get closer to a triple B or higher. I don't know. In terms of long term, it would be surprising to me if they don't return north of 50%. I'm thinking like 10 years down the road, if they're not returning closer to 50% of their free cash to shareholders and either buybacks or dividends. But in terms of thinking about which one it's going to be, that's tough. Next decade is in a very different scenario, right? Because anyway, I'll pause there. We can move to next decade if we need to.
Yeah, I think if I had to look at it, their expansions look like they're going to be expanding all the way into 2035, and even Delta could probably get restarted eventually. So my thinking is they'll probably do 30%, like 33% going to additional capex, 33% going towards share buybacks, another 33% going towards dividends, right? And then they'll do the dividends as gradual raises over time, and they'll just fluctuate between how much they're going to do in share buybacks based on the time. But I mean, they're choosing to be more exposed to the spot market. You know, unlike Cheniere, which is a lot more guaranteed, there are going to be years of feast and famine for venture global. So they're going to have to come up with a way that gives them that free cash flow certainty to a degree that doesn't like make investors like jump in at 20 and then sell out at 10 and then go back and forth, you know. And over time, of course, the company's going to do well because just that free cash flow. So I don't know. We'll see what happens with it. But next decade is also very interesting. I think the news just came out that they got Train 6 submitted to FERC, right?
Oh, did they? I didn't see that. That's good.
Yeah.
So I know that it was imminent, but I didn't realize it had already happened.
Yeah.
That's where the real money is going to be, guys. I mean, if they FID that and it's 100%, like that's very bullish. So yeah, that'll be very bullish because that's where the real money starts to come in. I mean, if you look at the whole Rio Grande project, it's going to be extremely massive in terms of total cash. But Next Decade doesn't own all of trains 1, 2, 3. It only owns about 21%. And then trains 4 and 5, it only owns 40 to 50%, depending on which one you're thinking about. And only after, which is likely to be like the mid 2030s, will it actually surpass, closer to 50%.
They got it approved right here. So right here, regulators have granted Next Decade another 3 years to complete the first 5 liquefaction trains under construction. Okay.
No, that's the 24-hour. The 24-hour thing.
Oh, though to work 24 hours so that they can move faster. Okay, got it.
Precisely. Right. And that was at the request of Bechtel.
Actually, let me see if someone actually posted this. Because I know someone in my Discord just mentioned it. I didn't get a chance to look at it.
So let me know when you're ready. I don't want to expose any of
your
stuff.
Yeah, both of the companies, long-term American energy dominance is key. The one thing is, until the Trump administration is in charge right now, they need to get as much out as possible. Oh, here it is. The person found it. Come on up. Why doesn't it just come up, man? Here it is.
Ready.
Okay, go ahead. Ready. So right here, here's the application for authorization for 6. Right here, respectfully request commission grant application on expedited basis by no later than March 27th. I think this is like a rubber stamp at this point.
So that's just the application, though. It's not an FID or anything.
Yeah, but the application is like the first step, And right now, with
very important.
And right now, with all this stuff happening in Iran, I don't think that they're going to have a tough time getting the financing lined up or customers, which is probably the more important thing.
Yeah, it's interesting. I'm curious to see who comes up to the plate. Is it going to be more Japanese customers? Is it going to be more Indian customers? Korean customers? I mean, we already have Hanwei, who's a big customer for Next Decade already. So very curious to see what you need. Sorry, I was reading a comment. What transpires, but other than that, man, I think the only thing else that I'm buying is Symbotic. I haven't really bought much more Microsoft or anything like that. Mm-hmm. I am surprised though that everyone. I'm starting to see more and more people turn against crypto, which I think is a good thing, considering we haven't even hit kind of like the middle of crypto winter in my thought. And I was just like reminiscing on the drive home. I was like, I remember literally less than 6 months ago, people thought I was crazy thinking that crypto winter was going to be a thing. And now here we are. This time's going to be different. The institutions are involved now. So I think it's good. I think that there's still a year-long runway for people to be able to buy in to crypto, whether it's Ethereum or Bitcoin. And then towards the second half of 27, I think you'll start to see some recovery in that space.
Yeah, I'm actually going long on. I know this is going to sound stupid for a lot of you, but cable, like Charter Communications and Comcast. I have both positions, so They're just, in my opinion, they're just super deep value, and they've been going down for almost like 5 years. So
What's
I'm
Comcast down to now?
147. It
Wasn't
was
it down
almost,
to 100?
no. It's been trading around here for a few days. So right here,
I
if you
remember
look
you
at
and I
this,
talked about it because the PE is so cheap. When was that though?
mhm, it
I feel like that
just
was
fell from 236 down to this for in the last quarter.
that's insane. I remember when you and I were looking at it and it was like a below 5 PE.
Yeah, now it's 4 PE. So I'm like, they generate enough free cash flow to buy the company at this point in 4 years. So I'm like, cool, let's go.
Oh, this
What's
is
good
Charter.
is,
Sorry, I was thinking Comcast. Sorry.
yeah, Comcast is down too, but Comcast is a little bit more safer in my opinion than Charter is, because Comcast has revenue coming in from their Epic Parks division as well as their new mobile division, but they're a $90 billion market cap company. The good thing is Comcast doesn't have nearly the amount of debt that Charter does. Charter has 4 times roughly net debt to EBITDA versus Comcast, which is like investment grade. They only have 2.2.5 or less than 2.5 times net debt to EBITDA. So in terms of bankruptcy risk, quote unquote, Comcast is not really there. Charter could theoretically get into some trouble if they hit a maturity wall and they can't get preferential refinancing. But once again, I did the math and I'm like, it's not really a big issue, especially because their capex is starting to go in the other direction now. So they've got plenty of free cash flow to pay down the maturities that are coming up and refinance a lot of them into the future. So, and there's no shortage of banks willing to lend them money. The other good thing is with Charter is that they don't have a dividend, and Comcast does. And unfortunately, one of the problems is even if your stock is trading at such a cheap multiple, theoretically, the better option would be to just cut the dividend completely and just utilize that cash flow towards buybacks, because you're going to get a much better return. So like right now, Comcast, and let me just show people. Sorry. So right now, if you look at Comcast cash flow, so this is their operating cash. Right now, they are doing share repurchases, which is always good, especially when your shares are down. But they also have a common dividend, and their common dividend right now is about $5 billion a year, and share buybacks are about $6 billion a year. So theoretically, if your company is trading at such a low PE, because at a 4 PE, every share that you buy back, that's like earning almost 20% return on your money. So instead of paying a 5% dividend, which by the way, you have to pay after taxes, and then your shareholders have to get that dividend and then they have to pay another tax on it, which is double taxation, a more efficient capital return strategy would be to just shut this down and instead focus on buying back more shares. The challenge is because you have this inbuilt dividend paying like investor base, you can't stop paying that dividend, because a lot of people are now reliant on that dividend versus Charter. Charter doesn't have that issue. Charter can just keep deploying their money at this towards share buybacks. And let me just show you like share repurchases, right? That's for some net repurchases right here. So they can just keep buying back. They don't have a dividend to worry about. Now, one of the challenges that these guys have been having is that their capex, because of like new technology upgrades that they needed to make for to be competitive against fiber. Let me just bring that up. So let's just put everything in one bucket so everyone can see. And let me go backwards a little bit more so people can kind of see. Let me do this. Okay, here we go. So you see this right here. This is their cash flow, cash from operations. So they're generating more money. So they were generating almost $16 billion in cash from operations. 7 billion of that was going towards capex, with another 15 billion going towards what is it called? Going towards share repurchases. Now, the question that everyone should be asking is, wait a second, how does that work? That means that they need another $6 billion. Where are they getting that from? Well, they were getting that by issuing debt. Where's that debt? Net issuance. Here it is, net issuance of debt. And let me just put that together. So there you go. So they were issuing debt right here and using debt issuance and cash flow from operations to basically do capex and then also do a bunch of share buybacks. But what happened is interest rates went up. So now they stopped doing a lot of debt issuances, and they're actually paying down the debt. Their operating cash is basically the same as it was before, but now because they have to be competitive against what is it called? Against the fiber guys, they had to spend more money on the technology upgrades, and now they're spending about $12 billion a year on tech upgrades. So that only leaves about $5 billion for share buybacks. The thing is, this right here, according to them and their guidance for the next 3 years, their capex is going to go from 12 to 8, and 8 is like their maintenance capex level. So all of that money that is being utilized for capex, around about $4 billion, is going to make its way towards their free cash flow. And if they're buying back $8 billion of stock per year in 2028, I mean, if you think about the share count is, look at this shit. Let me just show the share count. Okay. This is their diluted share count. Look at that.
Not enough.
Literally in 2019, they had 226 million shares outstanding. Now they have 133. The benefit is if they do $8 billion in share buybacks at $150 a share, let's say, that's 33% of the float. That means that they're going to pay down $33. I mean, 33 million shares are going to get bought back. They also have to issue some shares for Cox, which is like a whole different transaction. But there's like this company, if they do things right, in my opinion, Matt, 5 years, this thing is like $1,000 a share. 5 years, though, not anytime soon. 5 years, $1,000.
Still 6x return.
Yeah.
That's pretty good.
Yeah.
Are you still bullish on Amazon?
I am. Amazon's one of those things. Like their AWS business is going to grow 15-20% per year. They've got that massive stake in Anthropic. So as Anthropic's value keeps going up, they're going to go up. Now they're selling their Trainium. I mean, they have their own chips, like their Trainium, Inferentia, and Graviton chips. So they're cutting out a lot of the NVIDIA tax, which means that's more money that's going to go back into the pocket of shareholders instead of paying NVIDIA. So I think they're fine,
How can I get this to show us slideshow mode? There we go. This is the portfolio. We are up pretty well on Rocket Lab. Venture Global, we're up about 50%. Microsoft, the third largest position, hasn't really moved for us, about 2%. ASTS is up 350% as well.
Yeah.
TPG just paid us a dividend of $18, so we got that in our pocket. Meta is hanging out flat. That hasn't really been doing much for us. We bought some more Norwegian cruise lines.
Yes,
we're still down on Next, but that's a longer term hold. Amazon up 35%. Yeah. Salesforce was another one we added to yesterday or the day before. Down 2.5 on that. Bitcoin hasn't really been going anywhere as of late because it's been floppy. So maybe now is probably a time to potentially add now that we're in crypto winter. But I think we have some time there. We've actually started to see some movement in Upcellera as well.
Mhm.
And then I rolled our VG covered calls from June to July to capture a little bit more premium.
Nice. Keep raking that in that juice, man.
So with this current cost basis, we're up 42%. What do you think we are up year to date? And what do you think we are up in the last year?
I don't know, man. I wish we had bought DRAM that day that I called you, but then like I chickened out. I was like, I don't know about this RAM trade. Like because the ETF had just come out like about a month, and I saw everyone piling into DRAM. So I called Matt. I texted Matt. I said, Matt, we should probably buy some DRAM. What do you think? And I chickened out a little bit. I was like, I don't know. Like they have these Korean companies in there, and we didn't buy it, and it's up 50% since we had that text back and forth. But it would have been nice to have like a nice little bump up from that. So we made a little bit of money on TQQQ at the lows, and we caught that nice. So that helped a little bit of our return. We also had some service now leveraged, which was also another nice mover for us. So we did a little bit of money on that. I don't know, man. I don't know.
We are sitting on $3,000 worth of cash, which is pretty cool. We're up to 18 grand, man. Can you believe it?
No, 18.5 almost. Yeah. Yeah.
Give a guess.
I don't know.
Year to date and trailing 12 months.
Year to date, 30%.
Why are you doubting us, man?
I know I shouldn't, but
why are you doubting us?
30%.
What about trailing 12 months?
60%. I don't know, man.
Anyone in the chat want to guess what we're up year to date and trailing 12 months? We'll see if there's a couple answers. Otherwise, people are probably just going to be waiting for me to turn the page.
Let's see.
Zocold's closer. AMTU's closer. Man, we got some good ones. So we're up 57.
Okay.
And 89.
Cool. All right. We doing good.
But that's as of yesterday, and we're up another 1% today. So
nice.
That hasn't flowed through yet. So we'd be up a little bit more.
Yeah.
Come tomorrow.
The question is, what are we going to do with that 3,000? Is there someplace you want to deploy it other than the charter position I was talking about?
Yeah, I didn't get into that yet.
I'll go through the thesis with you, show you the entire thing behind it.
I was thinking about throwing 10,000 personally at just like some spreads on Micron, just like a piss in the wind, literally. Like if it goes up, it goes up. It doesn't. But I chickened out today.
The thing with Micron is that Micron, the premiums are just insane right now because the judges are trying to move higher. So I'm not sure the options route is necessarily the way to go. Yeah, I mean, if you think that the cycle is going to continue, we could add a little bit of DRAM. You know, if you think that they can go higher than what it is right now.
Potentially. Is DRAM an ETF or is it like an actual company?
No, it's an ETF that has the memory names in them. So it has SanDisk and Western Digital and SK Hynix and Samsung and Micron in there. So
okay.
I don't know. It just depends, like how you feel about it. I'm sort of leaning towards just being a little bit defensive. Maybe one of the things that we could do is put a couple of stock picks, like from Stock Talks. His port, like, what's his name? Sam has been killing it this year. Like he nailed what is it called? Nebius? Do you have any Nebius?
I don't have Nebula. No.
Dude, he told me about it when it was like 20 something dollars. I was like, yeah, I'll look into it. And I never looked into it. And then it started to run. And I was like, I'll buy it whenever it comes back down a little bit. And then, you know that meme where when it pulls back, like, oh, like I'll wait until it pulls back to buy it. But then the guy is like, I ain't buying that shit.
There you go.
So yeah, we could do some cash secured puts on DRAM if you want to do that route. Premiums are nice, so
I don't even know if we can do cash secured puts in this account. I'll have to find out. But somebody said that Snowflake is higher than Palantir. Share price doesn't necessarily mean
market cap.
This is just like a very sorry to kind of back it up for some folks, but share price doesn't necessarily mean that it is a larger company than another, right? So you can split up shares to however many as you would like. So just because it's a $240 share price doesn't necessarily mean that it's worth more than Palantir. Actually, if you look at Snowflake, it's a $60 billion company, and Palantir right now is probably 4 times the size of that. At
300 billion.
Yeah, it's 317 billion. So Palantir, even though the share price is half of Snowflake, doesn't necessarily mean that it is worth half. It's just a share price.
And the other thing people have to look at also is enterprise value versus market cap. What happens is the market cap is just the equity portion of the value of the company. The enterprise value of the company is if you took the debt and you took the equity value and combined them together, that is what's going to give you that enterprise value. And the reason why that's important is, let's say you have a company that's highly indebted, right? Let's say Charter Communications. Charter has almost $100 billion in debt, and the equity is only 107, and it's only 17 billion. Just the equity is 17 billion. The reason why that's super important is because that equity that's there is sitting all the way on top of this giant debt pile, right? But the thing is, as you pay down the debt pile, your equity portion actually becomes bigger and bigger. So what happens is you get this massive benefit that, it's kind of like a house. If you have a house and you basically got a mortgage for it, so 80% of the house actually belongs to the bank, 20% belongs to you. But over time, as you pay down the mortgage, more of the house becomes yours. Now, here's the other thing, though. If the value of the home goes up, the bank's value stays the same. Your equity portion goes higher. And so that's where you have to think about it from like an equity standpoint. So if you're buying right now, like let's say Charter, and it's a $17 billion market cap, if they pay down, let's say $17 billion in debt, that's $17 billion that goes right back into the company's value. And so it ends up being worth $34 billion. So at $150 a share, that ends up becoming $300 a share now, right? So that's the other thing too, that you have to kind of understand the difference between enterprise value and market cap. Because if you just purely look at the number, because it's like Grab is $3, so it's cheap, versus, I don't know, Uber, which is $100, and Uber's expensive. That's not how it works. People forget that Grab has 4 billion shares outstanding. So just remember that.
Yeah, it takes a lot to move the company.
Yeah.
And that's part of the reason why, like, as much as I love Venture Global, it's like there's so many shares outstanding that, like,
2 billion shares.
Yeah, so part of me is just like that's part of the reason why I like Next Decade a little bit more, because there's a much smaller fraction of shares.
Yeah, I wish they would eventually start a buyback program, but they're not going to do it until they really start cleaning up the balance sheet, right? They have a lot of debt. And the thing is, like, in terms of funding for them, that debt, some of it is issued at almost 11, 12%, like, coupon. So that's pretty high. Especially if you get to investment grade, you can turn that thing down to like 5%, and now you're saving yourself almost 500 basis points of margin a year, So it's probably better for them to pay down as much debt as possible. But here's the thing. They're going to be accumulating more debt along the way, but they've got the cash flows to back it. At some point, they're going to go from growth mode to maintenance mode and capital return mode. And that's when they're really going to inflect higher with their stock price. And not to just the stock price, but the returns that you'll get from the share buybacks and also from the dividends. So.
Yeah, because as of right now, pre swap, they're going to be making about 700 to 800 million in distributable cash flow, of which I anticipate a lot of that's going to go to paying down debt. And then if you think about how much these additional trains are going to cost, they're probably going to cost upwards of about $1 billion per MTPA. So each train itself is going to cost $6 billion. So FIDing train 6 is going to be a $6 billion project. So when the debt to EBITDA shows up for this company, it's not going to look good. And you're going to hear a lot of people say, oh my God, how could you invest in a company like this? And yada, yada, yada. And I'm already prepared. It's the same sort of thought process that people are going to have on VG, but it's once you kind of get to a place where you can refinance the debt, you get closer to a credit rating that's more sustainable. That's where it's going to be a lot more fun. So I'm very curious to see what transpires with that over time. I mean, if you're able to if you think about it, the first 3 trains, because you're only at 21%, it's only 3 point something MTPA. Like, it's not a lot of actual equity owned. And then if you think about trains 4 and 5, each of those is literally double the first phase. So by the time you get through trains 4 and 5, you're looking at about 9-10 MTPA of export capacity directly owned by NextDecade. And then if you think about it in that respect, you're like, okay, so that's churning out 800 or however much million in distributable cash flow per annum for that, let's say, that 10 MTPA. Well, each train after that is 5.5 to 6 MTPA. So you're literally, if every train after that, yes, of course, you have to take on the debt, etc. But each train after that, the distributable cash flow is going to increase by 50 odd %. So by the time this is all said and done with 10 trains, you're talking about likelihood of a distributable cash flow north of $2.5 to $3 billion. And the current market cap of the company is $2.5 billion. So what type of EBITDA would you put on that? Coupled with share buybacks and other things like that. So that's where I'm kind of curious what's going to transpire with the company, because again, it goes back to what Kris was talking about with Venture Global. At what pace do they focus on dividends? At what pace do they focus on buybacks? And buybacks for NextDecade are going to be much more valuable than they would be for a Venture Global, because of literally it almost has 1/10 the amount of shares. So I think it's like 260 million shares versus 2.6 billion shares for Venture Global. So.
Yeah, it'll be interesting to see what's going to happen, man. I don't know. What do you think about this AI trade? Do you think we've got legs on it to keep going? Like, how close do you think we are to this thing calming down a little bit? Because, I mean, clearly the market's been running, so.
I think that there's I think how I'm relating it, whether or not it's completely right or wrong. In fact, I know very likely I'm wrong, but how I'm relating to it, it's almost analogous to what we saw in 2021, 2022 with, and it's a perfect analogy because it's the same company. My thought, different industries, disparate industries, but same analogy. When you saw Amazon investing till kingdom come because they saw the growth rates for e-commerce because of the pandemic skyrocket year over year. So I think it was like 12% of all US goods that year in 2019 were e-commerce. Then the following year, because of the pandemic, it was over 21%. And so Amazon saw this and said, okay, well, that's never going to come back. Well, it didn't stay at 21%, right? It came down the year after, and eventually it came back to be about 14.5% by like 2023. And then it followed up on a line. And it's a beautiful line. Like if you pull it up, yes, there was a massive spike to 21, but then it kind of reverted back to the trend line, and it's kind of gone back right on that. And now I think we're at 16-17% of total commerce being in the United States being e-commerce. But what was I going to say? I think it's the same sort of thought process. Right now, we're probably seeing some massive growth trend, but there's likely going to be some normalization back to the mean. And so while Amazon might be spending $200 billion this year, maybe 250 next year, they're likely to realize like, oh shit, maybe we overbuilt. And it's not to say that that is for naught. I don't think it will be for naught. But it'll be a place where they pull back and say, oh shit, just like we did during the pandemic, we invested too fast. The market has yet to catch up yet. And or chips have become so powerful, you don't need to build as much infrastructure. You have more powerful chips. So whether they're twice as fast, etc. So we were planning on building X amount of data centers, cancel the future ones. It's not to say that it's going to zero. It's just, as we always see, it's going to be cyclical. And so when that happens, when that pullback happens, I don't know. I mean, I know Steve is very bullish about it going to 28 and beyond. I don't know. I thought the same thing with Amazon for the warehouses. And then next thing you know, which I'm glad as well, because when you look at these companies, and this is probably different, but back then in 2021, 2022, the headcounts grew massively for a lot of those companies that were hiring like crazy, like Metas of the world, the Googles of the world, the Amazons of the world. And so they were trying to grow at all costs in sacrifice of their net income margins. So I think that that's likely also going to play a factor into it as well, because not only will you have just the fact that you have inflation, and no longer are you talking about like AWS revenues and margins, et cetera. You're talking about data center revenues, which, it's expensive to get those things online. So what type of return on invested capital you got to see, et cetera. Then you have a large depreciation curve that's going to be coming in. And what do you claim for that? Is it going to be 5 years? Are you going to try it 7 years? What is that? So that's going to also have a drag. And you're spending $200 billion a year. At what pace do you depreciate that $200 billion a year, right? I mean, how quick does that $200 billion actually come online? Is it 24 months from then? Is it 36 months from then? So you think about it, if like that $200 billion per annum gets depreciated, over 7 years, that's going to be $30 billion a year that you add to the depreciation. So at what point does that show up in the net income statement, right? Are we going to evaluate these things like we're evaluating Venture Global, where we're talking about EBITDA rather than net income because of how much depreciation is being built in, because how many chips you're buying? And that's the sort of thing. And if you think about it, it's like a lot of that is because you're getting tax breaks associated with investing so much into your business. That's part of the reason why oil and gas companies, it's probably better to look at EBITDA versus net income, because there's depreciation and depletion costs, etc. So I don't know. I don't have an answer for you, but I'm cautiously optimistic it'll run through this year. I would like to say if I had a hat, I'd eat it, because I thought towards the end of this year you'd probably start to see a slowdown. But right now it just seems like things are firing on all cylinders. So maybe not to the end of 27, early 28 right now.
I am in agreement with you. The thing is, a lot of the earnings that have been recently coming out, they've been juiced up by equity gains. And so they're kind of masking the deterioration in margins. So if you look at the margins of these guys, because you're spending so much money, so your free cash flow is just getting absolutely whittled away. But the thing is, every time you have earnings, you're like, oh my God, look, we beat earnings. And then you look at it and it's like, you look a little bit closer, you're like, what? You got 50 billion in equity gains from your Anthropic stake? It's like, so how does that work? And so what happens is right now it's a boost. But let's say next year Anthropic goes public and now the company is, worth a good amount of money, and then it starts to come down because that's just how the market is. It's down 30, 40, 50%. Now you have to recognize that net loss on your balance sheet. So, it's a weird scenario. So then what happens is everyone freaks out and it's like, oh, wait, they missed their EPS. How did they miss their EPS? I thought this was an extremely low PE. And then it's like, well, that's because half of your earnings last year came from your equity gains. And now you have to include depreciation because depreciation is included in your net income. So you've got a shit ton of depreciation that you have to include. And then you have to include losses on your equity portion on your OpenAI and Anthropic stakes. And that's the thing. The IPOs, in my opinion, Matt, are going to be the camel that broke the back. It's going to be the thing that broke the camel's back. Once these IPOs come out, I think the market is going to look at those numbers and it's going to have that 2021 moment and people are going to freak out. The early investors who've been in this thing, they've made their 100x and 1000x, they're going to be selling into this market. And when they sell into this market, it's going to be just a pool of fucking liquidity that's coming in. And what's happening is this is the reality that people may or may not want to accept. But right now, the best models, quote unquote, are Anthropic's models, right? Now, Anthropic is charging a F ton for them because there's just so much demand for Anthropic's models. But we saw some cracks today. The guy from Uber, their CEO, said, listen, man, we can't be running these tokens the way that you are. We can't screw the entire business over to try to gain efficiency. So some businesses were like, we're going to become $1 billion more efficient utilizing AI. But then they spent $200 million, $200 million, $300 million on AI compute costs in like 4 months. So it's like, wait, I thought AI was supposed to save us money, not cost us money. And so I think a lot of those companies are going to say, what can we do in order to utilize AI, but not spend a crap ton of money? And I think what they're going to do is say, for the most crazy performance that we need and accuracy, we're going to use the best models. But for like the monotonous bullshit work, we're going to use the lower end models and the models that basically don't cost anything. A lot of the Chinese models are basically like that, like DeepSeek V4 is like that. And there's also a lot of open source models that are coming out. So I think long term, the Anthropics and the OpenAIs of the world are not going to have the crazy premium pricing that they currently have. And I think the market eventually is going to recognize it. They're going to re-rate them lower, and we'll see what happens. I mean, I think someone in the comments section actually mentioned it too, which was, listen, let's kind of like move the compute away from pure data centers to sometimes on local. And I think that's what Apple is betting on. They're saying, look, we're just going to make some really good chips. We're going to get a really, really good local model. And every phone is going to have an AI feature in there, but it's not going to have to like use an API call to Claude, or it's not going to have an API call to Gemini or API call out to OpenAI. We're just going to use internally that model. And the thing is, a lot of times you don't need a crazy high level model. You actually just need like a lower end model, and it's perfectly fine. The other challenge is Anthropic and OpenAI gets here. The Chinese models, they distill the shit out of it. They get over here, undercut them. So now you're losing the premium pricing. So what do? You have to keep piling in more and more money into stronger models, right? So the next model gets here, and then the Chinese models go right there. And it's like, What the problem is, the entire time you're going this way, you're actually spending a crap ton of money on compute. And then eventually the gap is going to narrow to the point where it's like, where are we? And then the differentiation models become so slight that it ends up becoming more of about price than it is about the actual performance that you're going to get. So in my opinion, you've got three benchmarks that actually matter. Number one is accuracy of your answers. Number two is the speed of those answers. Because if you have a model that takes you like 10 minutes to get an answer, it's not really good. So you need speed. And the last thing is cost. Right now, everyone's been focusing on speed and accuracy, and cost has been kind of like, whatever. AI is AI. But I think now we're getting into the zone where people are concerned with cost. And so it's not going to only be which model can be the best in terms of accuracy, but which one can deliver you the answer at the cheapest price. And that is not a good thing for Anthropic or OpenAI, because you basically are trying to outcompete the other person on price.
So question for you. Did you happen to watch the interview today with David Steinberg from Zeta?
No, I didn't. I didn't get a chance. Get a chance to watch it yet. No.
Okay. Well, yeah, I was just gonna see if you had any thoughts on it. I think it was interesting. I'm curious to, maybe we'll talk about it next time. But yeah, I was kind of curious if that made you more or less bullish about Zeta. I thought it was very interesting. I learned a lot about the company. Misnomers that I think unless you really do your true due diligence, you might not necessarily completely understand. Not saying you, but I personally didn't understand. What did you think of the Anthony Noto interview with Basis Points? Did you finish that as well or no?
Yeah, I did finish that. I think you can't bet. You really don't want to bet against that guy. Like, he's such a good guy. Like, and he seems like a go-getter. I think if I were to buy SoFi, I would lean a lot more into just the leadership quality rather than trying to understand the numbers completely. And not to say that I'll completely say the numbers are irrelevant. I just believe in Noto. I'm going to follow the cult. Like, I'm not that guy. Like, just too old to be that guy. But I think if it gets low enough, my threshold to buy on SoFi actually went up a little bit. So before, I was probably more likely to enter at like a $10 per share. Now I'm probably more in the line of like $12 and $13, because I just, you can tell the guy is a very smart guy. He comes from Goldman Sachs. The way that he's, trying to create value for shareholders is there, so you kind of want to have a leader that's pretty dynamic in that regard and understands the business, because clearly he does. He's been successfully running this company. So yeah, that's what I would say about the interview. The interview made me increase my threshold on my buy level.
Do you think that it'll eventually be $1 trillion company?
My honest answer, who knows? I mean, if they're around in 100 years, probably. By that time, everyone's $1 trillion company, So I think the key is, what is your time horizon and what kind of returns are you looking for? Are you looking for 15, 20% per year returns? Are you looking for a 10x return? At the end of the day, it's a bank. It's got a financial arm, but it's a bank. So if you're expecting like a 10x on this company, it's probably not in the cards. Like, give it a break here. Like, let's just be real about it. Like, this is not a tech company that can grow itself 50, 60, 70% per year. Their main business is, you take depositor capital, you lend it out, you get a margin between the price that you pay the depositor and the price that you lend the money out to. They also have a business where they take a lot of those loans, repackage them, commoditize them, sell them, and basically get a fee for that transaction, for bundling all of this together. And then they get a fee for collecting the payments every month, right? Like, that's their business model. They also have not Braintree. What is it? What's the other thing that they have? Like, their transaction-based revenue, but that's not like a meaningful profitability driver for them right now. It could be in the future, but it's not there right now. So I'd say I would buy it on like $10 buyer, $20, probably sell covered calls on it. And then eventually probably gradually move that higher and higher as the business keeps performing, right? So I think if the market goes absolutely stupid and starts selling SoFi like at $12, I'll probably buy some. And then I'll wait until it, the market gets irrational and gets like to $20, and I'll probably sell covered calls and or maybe even sell the position if I have the need for the capital somewhere else. But I think SoFi is a great stock to trade. There's enough liquidity in there. There's a lot of volatility where you can make some money if you're just willing to hold it. I don't know if they have it in them to be like a parabolic up and to the right like this. Like, I'm sorry, that's really like a tech thing, or it's like energy or pharma. Tech, energy, and pharma have these like infinite spikes. Tech has it because you create some revolutionary product that just goes gangbusters and it's scalable like there's no tomorrow. So you can have that crazy fast return. Energy, Strait of Hormuz is closed, oil price goes to 120, spike, right? And pharma, we just came up with a drug that's like super, super, cures everything. And now all of a sudden your $1 stock becomes a $200 stock. But those are the three industries where you can have like parabolic gains. The rest of them are probably like market moving stocks that kind of like gradually go up over time.
You don't think SoFi USD, I'm putting my Steve Fiorillo hat on. You don't think SoFi USD is going to have a massive influx of revenue and eventually net income for the company that would drive market cap? And by the way, for anybody that's kind of paying attention, $1 trillion market cap would mean this goes up 40 to 45x, not assuming massive amounts of share dilution. So currently the stock is trading around 21 billion. And, obviously a 1 trillion market cap would be, a 45x at this point. So yeah, back on SoFi USD.
It kind of depends on the adoption curve on this thing. Like if we start to see like it's actually being adopted pretty heavily, then maybe that's something that we can keep an eye on. But as far as I can tell, it's like you have to look at the on-chain transaction volumes on this thing, right? Because I think what they're trying to do is they're trying to replicate sort of like a circle model, where basically everyone buys into these tokens and you're basically holding on to the dollars, you're giving them the SoFi USD, and you're making a spread on it by basically taking that money and just buying treasuries with it. And now if you got, let's say, $50 billion of people utilizing SoFi USD, and you can get 5% on $50 billion, what was that, 2.5 billion a year in income, net income, right? But you need to get to $50 billion of actual market cap on that coin. What's the market cap on SoFi USD right now?
No idea.
See? So I don't know.
Are you buying SpaceX?
No.
Not even a little?
Not interested.
I'd probably buy 1,000 just to be a part of it.
Not
because I'm just making money, but just because, if we actually go to Mars, I would like to have that in my back pocket.
I'm not going to buy because I think there's going to be so many people trying to exit because they've been holding this thing for so long, So I think at a $2 trillion market cap, I think there will be a time where you could probably buy this thing at half price, and if you can't, you can't. But if you buy it, you could buy it at $1 trillion market cap and, hold it. Yeah. I'm not sure I'd buy it at a $2 trillion market cap. That just seems rather up there.
Yeah, I mean, I'll probably end up buying about $1,000 worth just to have. Like, I'm obviously not making money. It's obviously not going to be something where I lose sleep over. But you're right. I would potentially only really consider entering a position below $1 trillion. It doesn't necessarily make sense right now. But at the same time, a lot of people would probably say the same about Rocket Lab at its current price as well. So I get it. But I'm not adding to Rocket Lab much either. I mean, I'm adding like $25 twice a month. Like, it's not like I was adding, a lot more to that. And instead I said, you know what, until I know more, right? I am cautiously optimistic more will come out about the company where I could then unlock maybe greater than a $200 billion market cap for say, Rocket Lab. But until then, I'm putting more money into Symbotic. I'm putting more money into next decade. The companies that I currently believe are undervalued comparatively to where they, I think their terminal value would be.
So Hong looked it up. There's $100 million in SoFi USD. So that's, even if they took that cash, you know, and put it into treasuries, you get what, 4.5%, 5%, $5 million right now. So it's not nothing, but it's not exactly like a mover. So you need a lot of money to be in SoFi USD in order to make some decent returns. So
yeah, I think from what they were saying, MasterCard is like 10 billion in transaction volume a day or something like that. So if it really is ended up being, 10 billion, and you were to get, let's just say, the transaction volume of that, maybe you'd be able to make an additional 400 million on that. I don't know.
Yeah, man. Maybe someone. I thought we did an episode with Symbiotic. I think we did. Yeah.
I know I looked at it, and I don't know if I've made an individual video. I do want to say though, right now I am shorting oil, so I did a diagonal credit spread. I have two different trades going. I have 20 contracts for September 140, 155s. And I forget what the pocket of that was. I think it was like $10 or so $1,000. And so the max I could lose there is about 20 grand. So we'll see. And then I wrote some contracts this morning. I think I wrote 5 contracts for, it might have been January 2027, at the 140, I believe. And then the short put was, or sorry, not short put. The short call was at 140 for January 27. And then it might have been September, I don't remember, but I got $16 credit for it. The long call was for June or July at 160. And so each pocketed, I think, like 14 or 15 bucks a contract. So fingers crossed that we continue to have a deal. And if not, I'll just continue to roll it out over time until it works. But I'm cautiously optimistic. The world just has so much oil right now that it just doesn't make sense to think that oil is going to stay north of $100 a barrel.
Yeah. Can we just laugh at this one guy, please, on Twitter? This guy on CNN. I am no fan of some of the moves that the administration's made with regards to Iran, right? But man, when it comes to political hackery that you see with CNN, we got to call that shit out, because this is, let me just put it right here. Hold on one second. Once you see this, you're gonna laugh your ass off as well. Right here we go. Found it. This is like the people that they have experts come on to CNN. Look at this.
There's no noise.
Let me just put it back and share right here. Okay, there we go. So check this out.
So how long is it going to be before we actually start to see some relief? Look at this. This is where we were before the war started. This is where we are right now. There's a huge amount of time that it's going to take, according to the futures market, before we get back down to that sub $70 an oil level. Look at this, 2032. So you want $3 gas again, you're going to have to wait maybe 6 years. And so what does that mean for everything? Look at this. produce, clothing, airfare, gas, shipping, all of these rely on high gas prices, high oil prices. All of them are going to continue to be more expensive as long as this lasts.
I'm sorry, did I hear you correctly? Did you say 2032?
Yeah. So if you look at this, this tells you what the oil market is predicting prices will be in the future. We don't get back down to this level until 2032. That's the prediction. We'll see if that ends up being the case. But
What do you think?
I think he's just looking at the current reel, and I don't know. I think if it could be very well. It's an interesting scenario, right? So I think if things transpire with Iran, we come to a conclusion, oil's going to be back below $80, by the end of June. Is it going to go below 70? I don't know. I think that might take a little bit more time. I think there's been one thing that I've been meaning to do is check out how and whose strategic reserves have been depleted a good amount by what's transpired over the past few months. Because everybody before any geopolitical issues happened, I was very bearish on oil prices, just knowing how much oil production there was, and as well as how many people had very high levels within their storage, meaning very low remaining capacity for additional storage. Now that we've been able to flush some of that out of the system, what I don't know is where those levels are worldwide. LNG, I think, is going to be more impacted for now, but I think if this transpires another couple months, it's going to be a completely different situation. If it resolves itself before the end of June, before the beginning of June, then yeah, I would say oil is going to go below $80 very quickly, $70 way before the end of the year. But I think it all just depends upon when that deal comes through.
Oh shit!
So yeah,
Maddie,
what's that?
Iran launches missile barrage on Kuwait, attempting to hit U.S. bases. Iran is reporting explosions. So basically, we attacked them; they attacked us. U.S. will keep control of money. When they behave, we'll let them have their money. What's going on here? What
Sounds
is
about
going
right.
out? Let's see. IRGC says it's launched strikes on U.S. air bases. U.S. military has conducted more defensive strikes on southern Iran, striking targets believed to pose a threat to U.S. forces. Multiple Iranian drones have also been shot down. What the hell? Wait, hold on. But U.S. launches airstrikes on Iran, but says ceasefire still holds. What is the point of a ceasefire if you attack each other? That's not a ceasefire. That's like two boxers punching each other after the bells are rang. It's like, no, we're still in round one, bro. Good times. Good
So
times.
what Porsche are we buying?
You can buy a Porsche, man. I'm too like I don't know what to call it. I'm too cheap to buy a Porsche.
Don't say that.
I am too cheap. I had a Mercedes at one point. My dad had come into some good money in like 2010. He's like, I'm gonna buy a Benz. Like that was like his thing that he wanted to buy a Benz. And he bought it and he drove it for like a month. And he was like, he went to go get an oil change and they were trying to charge him like $300. And he's like, what the fuck you mean $300? And they're like, listen, it's a Mercedes. What do you want? Like you have to have like a special filter just for the Benz. And my dad got pissed off, and then he didn't realize that it needed premium gas only. And that shit was just kept pissing him off more and more. And he just told me, he's like, you can have the car. I can't drive this car. And I drove it for like a good solid year and a half, 2 years. But I felt it too. So ever since then, I'm like, nah, bro, I'm not really into the luxury cars. Like my wife has a Lexus. It's really nice. But I'm a Toyota guy, man. You give me a nice, I was thinking about getting a Camry, like a newer Camry. Or I I might even actually I'm thinking about getting a Model Y. One of the cool things is by my condo right now. There's like new charging stations that just opened up. So like now I actually have a place where I can go charge the car. So I'm thinking about it. Before I didn't have that. And eventually when I do buy a house, I'm just gonna get this, charger installed and when I get the home and stuff. So until then, I could just use the Tesla, So
Someone's got to do it.
yeah, I gotta trade in my wife's Lexus. Like it's the age is starting to show on it. So it's not an old car. It's like a 2017 something. I forgot, like NX something. It's one of the SUVs, which is really nice car. It drives perfect. Like, dude, Lexus is such a great freaking brand. We never had one issue with the car. Engine works all the time. I mean, the only things that we had to deal with is flat tires. Always got a regular oil change on the thing. We maintained it really well. It does need some new brakes, but that's about it. But it's got almost like 150,000 miles on it now. So yeah. What about you? What's your car situation like?
I have a 2018 Chevy Tahoe.
I remember in your Tahoe.
Good old 90,000 miles on it. So yeah,
you need a new one.
No payment. I need to get the AC fixed because it's getting hot here in Houston.
The AC is broken.
Yeah. So, like I said, man, like I don't buy stuff. But when people it's kind of a joke when I tell people like when Lambo. Like I really don't spend a lot of money, and so it's actually very difficult. Like part of me, like most people would be like, oh yeah, like buying a Porsche would be super easy. It's like it's actually kind of very difficult for me because I've been in this mode of save for so long.
Which Porsche are you thinking about getting?
I wouldn't buy a new one.
Show us a thing, man. Come on.
I don't have one in particular. I mean, I've been looking at. I wouldn't want to spend more than like 150, 160. And so I'm looking at like 2016 to 2019 911 turbo or maybe a GT3.
You okay with driving something that low to the ground?
Yeah. I sat in them. Did I tell you the story or no?
No, you told me like you sat in it and you're just like, wow, it just fits like a glove.
Yeah, I'm like, what the fuck? Like, I wish it didn't fucking fit because I'm a big dude, right? So I was hoping it wouldn't fit. The earlier years, so like the early 2000s, apparently, those are smaller. So it would probably be too tight, or I'd have to lose more weight for that to kind of make sense. But I don't know. Part of me is also like, do I just buy like something crazy like a Gallardo? But I know a Gallardo would be smaller as well. So part of me is just like, you know what, man? Like, if I just keep up what I'm doing and I'm still working, then I can, buy another one if it's really something I really want to do. But I've never really bought anything. So buying something that's probably more street friendly and daily driver friendly, even though I'm not going to daily drive it, but would probably be more preferred. And if I really decide to get rid of it, I'm sure I could sell it, swap it out, get a Lambo if I really wanted,
You could rent a Porsche on Turo for like a couple of weeks, see if you like it, and go make your decision after that. Like I wouldn't necessarily go right into it, but like I said, it's up to you. For my wedding, I ended up getting a Corvette Stingray. I just borrowed it for the weekend, so it was cool. I liked it. It was nice. But it's definitely not something that I'd buy. I'm more of a practical person now. The only luxury car that I'll get it. Eventually I'll get it. But this is the dream luxury car. Let me show you. It's the Lexus LC 500. I just wish that they would make an electric version of it. But this is a beautiful car.
That's the Mr. Patel special.
Yeah. This is the one, man. This is the one. This is the car that my wife has, the NX. Yeah, right here, the NX regular one.
So she's fancy.
Yeah, we got the F Sport version. There it is. This right here.
She's fancy, man.
She's not fancy. She's got it in black, so it's like this. It's a really good car. We love it. Actually, no, it's silver. So where is? The only thing is, like, I got it was like 1 year behind on the upgraded infotainment panel for this thing. So like it doesn't have CarPlay. So it's like that's like the only thing I don't like about it. It's like why the hell can't y'all just like do a software update and get like CarPlay? I mean, I could get like this upgrade, but I'm like, bro, at 150,000, like I'm not gonna pay to get the damn thing upgraded with like a new thing. Like I don't know what to call it. So yeah.
She married Kris. She is fancy.
Yeah, she can't be that fancy. I tricked her. Took her to some Broadway shows. Like I took her to Aladdin on our first date. Sealed the deal, brah. Took her to Broadway, got great seats. She was in after that. She thought like that was gonna be her life for the rest of her life. Lo and behold, that was like a fishing maneuver. Fish that fish out, and then now we just go to the movies at Movie Tavern.
Hey man, nothing wrong with Movie Tavern.
Yeah, it's like, oh, let's go to Broadway. Nope, Movie Tavern's right here, girl. Let's go.
I've never been.
They got the reclining seats, baby.
Never been to the Movie Tavern, or no, sorry, never been to Broadway. I mean,
Oh yeah, it's good.
I've walked on
It's
Broadway, but I've never been to a Broadway show.
Aladdin is the best one. Aladdin is really good. Lion King was really good. Wicked was good. I shouldn't say that. Now the wife is going to be like, who the fuck you go to see these with? Because I only took her to one, so.
It's a whole new world. Brand new
Yeah,
place.
it's a whole new
You've never been.
It's a whole new
She's like, my life is a whole new world.
honey, we can go. The door just opened up by itself. It wasn't her.
Ah,
Bro. I got new couches. I swear to God, man, these new couches are nice, but like the last couch that I had, I slept on that couch for 6.5 years. So my butt is like proper. Like I used to fall asleep. These new couches, I tried sleeping on it. It is not good. Not yet. I'm gonna have to like mold it a little bit, you know? It's too firm right now. I haven't slept on that couch enough. So
I think one of these weekends, man, in the second half of the year, we're gonna have to. Well, are you gonna do Toronto for Tanner's meetup or no?
maybe we'll see.
Maybe. Okay, I'm definitely gonna do that. Because I know some people in Toronto, so it'd be good. I haven't seen them in quite some time, so it'd be good to see some people. And I just want to support Tanner.
Yeah.
I don't know how many meetups he's gonna do. Knowing him, he really cherishes his sleep, so probably not going to do many outside of Canada. So it'd be good. Give me an opportunity to go to Toronto, and actually from Toronto, it's probably better for me to fly some places. So maybe I'll end up choosing and seeing. But
well, before we head out, I just want to ask the chat. What are your this is directed to the chat. What are some good date night ideas? Like me and the wife, we're trying to like reconnect and like having fun now. So one of the things we're gonna do is do like a pottery class together. Do you guys have any suggestions on things that you can do as a couple? Hopefully throughout the week. I think we're gonna try to learn how to do some dancing as well, but we'll see about that one.
Yeah, I was gonna say, don't ask me, man. I was told recently that I'm closed off and I need to get more in touch with my feminine side.
That's all bullshit, bro.
And I was like, feminine? I was like, I didn't know I was supposed to be feminine. I thought I was supposed to be fucking masculine, but
yeah.
I don't know.
Escape rooms. Yeah, I love escape rooms. So maybe we'll do an escape room.
I will say one of the best dates that I ever had was a wine tasting.
Okay.
Just going around. There was a lot of people. Yeah, so people are saying some wine stuff, but I like the wine tasting because like there's so many different wines. People are trying to sell you wine. There's some light foods there.
I might take her here for her birthday. Have you ever been here? It's called Chateau Alon.
No, I can't afford it.
Oh, shut up, man. You can afford it.
I ain't got that.
Yeah.
That
Chateau
Patel
Alon. Chateau Alon is here in northern Georgia. It's really freaking cool. Look at the resort. So might make a weekend out of it.
Oh.
Yeah, it's like a winery, and they've got like spas and all sorts of things, massages and stuff. So yeah, just trying to reconnect with the wife, do like the romantic thing. So yeah. If you come to next time, if you come to Georgia, man, I'll take you to Helen. Helen is like this German town that's like just randomly in the middle of the Georgia mountains. I tell you, it's really cool. So
I like it. Yeah, yes. I do need to make a trip out.
Yeah, or even a cruise. Let me know.
Don't get me started on the cruise, but yeah, I need to plan the rest of my because I'll be doing Singapore, and then when I come back from Singapore/Bali, I gotta think, dude. I would kill for a bratwurst on a nice roll. Jesus, it's the best. Some good mustard.
She's gonna take me to She's gonna take me to the Coca-Cola factory. I've been in Atlanta for almost 10 years now. I haven't gone to the Coca-Cola factory yet.
So you take apparently Atlanta's got some world-class clubs. Maybe she could take you there. Just kidding. What else is there?
We have some really good strip clubs here. The Wings. I might actually go to a strip club with her for the Wings. Like, I know that sounds really.
I bet Atlanta has the best wings, bro.
Magic City Wings. I keep hearing about Magic City's wings, so we'll see.
Jeez, that's where all wings are my weakness, bro. Funny story. My one buddy when we were growing up, his sister really liked me, and she was just like, "How do I get Matt to like me?" Like blah blah, and he was like, "Dude, you want to know? Just take Matt to go get like chicken wings somewhere." Like, it's just like, how am I supposed to look cute and funny and all that when I have like buffalo sauce all over my fingers? And I'm like, you'd be surprised. But
someone says strip club a way to reconnect with a partner. No. I'm not going there to see the naked lady. I'm going there for the wings. My wife loves the wings, and she's the one who told me like Magic City has amazing wings. So it's not me, it's her.
I didn't know Boss Lady was a wing gal.
Oh, she loves.
Does she like her spicy wings, or she like flavor wings? Like, what's the deal?
She likes everything. Bone-in wings. I'm a boneless guy. Like I hate bone-in. She loves bone-in. So.
Love bone-in, man. I'd most of the time do boneless, but because bone-in is more expensive these days, even though chicken wings aren't even that cheap. Like, they're pretty cheap when you go to the store now. So I don't understand why the prices from like Wingstop and stuff haven't come down. But
my wife's in the chat. She's like, I haven't taken you to Coca-Cola factory because you're cheap, bro. It's true. I have I'm waiting on like my veterans card to come in because like Coca-Cola factory, if you're a veteran, they let you in for free. And we were supposed to go, and I was like, no, babe, it's the principle. We can't go until this card comes. So I'm waiting on the card before I go.
Date night.
Listen, I'm a Patel at heart, man. If it's free, it's for me. Okay, I'm not paying $20
for me.
I'm not paying no $20 to do something that I'm technically entitled to. So if you ever want to go to a national park, let me know. I have free entry to all national parks.
That's a good question. Chicken wings or tandoori chicken?
Tandoori chicken.
I'm a good tandoori chicken, man. Don't even get me started.
I'll take
really good wings though, bro. Fuck, that's a tough one.
I'll take you to this Indian restaurant around me. It's got really, really good chicken. It doesn't like it looks pretty grimy from the outside, but it's really good. That's how you know it's good, because it's grimy.
Is there any Pakistani girls over there or what?
Nah.
Nah.
Nope. They hide them.
I'm in all color, shapes, and sizes. You know that.
Yeah. All right, brother. Well, I gotta go.
On that note, before I get castrated, you're the man, dude. Appreciate it, and appreciate your patience, because I know I was out of town and everything for the past couple weeks. So.
That's all good. It's all good.
Let me think. Yeah, we'll try again next week, hopefully. Appreciate everybody stopping by. Kris, how about a good old outro, like good old say for good old times?
Yeah, go for it, man. Play it.
All right, everybody. See you guys next week. Thank you so much. We had over 300 people joining us for the majority of the time live concurrently. So really appreciate you guys and hope to be back next week. Have a good one. Cheers.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving!
Sell it all today.
Or look at this thing. It's beautiful!
Welcome to the fucking show.